Today's Talk About It Tuesday question is: you often give advice for long term investors, but what advice can you give to an investor looking for a high return in 1 year? Well, I can give you some amazing advice, but I'm very reluctant because most people say 1 year and they don't stick to the plan. So before I reveal this big secret, you must be disciplined and stick to the plan. So the reason we talk about short term being 1 year, right, and actually a year and a day or more, is because of the capital gains tax. If you sell an investment prior to a year and a day, you pay short term capital gains tax, which is much higher than long term capital gains tax, which kicks in a year and a day. So when we talk about short term, we're talking about 1 to maximum 3 years as a short term investment. But the one I'm going to share with you today is perfect for 1 year. So when I say perfect, I mean low barrier to entry, easy to get into, extremely easy to get out of if things don't go the way you desire, easy to track and follow, easy to choose. So let's get to it. Most of you have heard me say that for long term investing, you should invest in index funds. So, an index fund is a passive mutual fund based on one of the indices like the S&P 500. So, for a short term to try to get a windfall in 1 year, super aggressive but much more highly risky, I would say a mutual fund over an index fund. So, how do you choose the mutual fund? Well, most people don't realize that currently on the market, there are over 20,000 mutual funds. So, how do you decide? If you're talking about 1 year, there are certain things that you want to look at. So, obviously, you want to look at the economy and choose a fund that's based on something that's trending positively in the economy and will probably trend positively for a year. So you have to keep that in mind. But the other shortcut that has to then correlate with that is how do you sift through the 20,000 to find the one you want? So if you're looking for performance, then you have to find a fund screener that screens by performance. So if you went on something like Morningstar.com, and they have a free version and a paid version, and I think you could do the free trial, right, and get access to this. You would go on Tools, then you would go on Fund Screener, then you would choose Performance, right, to see how they perform, ranked in order of performance. So most people think of a good return based on the average for the S&P 500, which is probably about 16% right now. But I will tell you, and I screenshotted the page so I can give you accurate information. The top 19 performing funds currently, 1 year return, because we want to look at 1 year, because we're looking at something trending now. The top 19 performing funds paid over 100% return. 1 year return. And the 20th one was like 99.5, right? So it's just under. So the top 20 basically are paying 100% or better. So I just wanted to read you the exact numbers for, let's say, the top 5. The top performing fund right now, 1 year return, 151.45%. Number 2, 149.04%. Number 3, 124.44%. And number 5, 115.15%. So we have to look at what these funds are investing in. What are they based upon? So I will tell you the top 30 performing mutual funds currently are all based on precious metals. So you're like, oh, why would you always say don't invest in gold? I'm not telling you invest in gold. I'm telling you invest in the companies that support precious metals because in an uncertain economy, which is what we have now, there are a slew of people who will run to buy gold as a hedge against inflation, as a safe haven for their wealth. So they're running to gold. That means gold mine companies, companies that support gold mines, companies that sell precious metals, that are all in this fund. All their value is going up as people run to gold. Now, again, why? The barrier to entry is low. It's easy to buy a fund. You don't have to worry about security. You buy a chunk of gold, where are you going to put it? First, you got to secure it. Second, when it's time to get rid of it, it's going to be harder to get rid of that. And with a mutual fund, it's a click of a button and it's gone. So what are all the barriers to entry? Some of the, no, well, they all, I should say, have a minimum investment. Some are out of the range for some people in terms of the minimum investment. Some of the best performing funds, the minimum investment is $1 million. That's going to be off the table. But for some of the others, it's as low as $1,000. So if you had $1,000, some are 15,000, some are 50,000, you would have to go through those top performing ones and see which ones make the most sense in terms of your ability to get into it. Now, here's the thing. You have to have an exit strategy. 1 year and 1 day, you're going to look at it and say, okay, even though I made this great return, it's time to get out, because that's what you said the goal was. It is going to be difficult when you get a huge return. I bought a mutual fund one time and got over a 200% return on my investment. And of course, I was undisciplined. I said, let me ride this thing. And it's not like some of these things just taper off. They go off the cliff when they go, right? And it's very difficult to predict out 2, 3, 4 years what it's going to do, because again, these particular funds were based on the health of the economy and people's psychological reaction and emotional reaction to what they perceive the economy to be. And that can turn on a dime. So I guarantee you 5 years from now, 10 years from now, those will not be the top performing funds. So they are not appropriate for long-term investing, but for short-term, perhaps. And again, you don't have to necessarily get 150% return. You can keep going down the list. The top 30 of them, like I said, are in precious metals. But beyond that, there are some other areas that these funds are investing in that you might feel a little more familiar with or a little more comfortable with. So that's a shortcut to trying to get a windfall. Of course, there are no guarantees. It did it for a year. It doesn't mean it's going to get another 149% this year. But we know which way it's trending, at least for a year. And we know the state of the economy. And we know price of gold is going up because people are buying it. And so in the short term, yeah, I wouldn't say always a gold fund, but I'm saying go to the fund screeners and look at what's performing in the 1 year return category. And if you want to take a shot, and again, that's just a shot, that's not all your money. You take a shot at a windfall, that's a perfect way to do it. Low barrier to entry, easy in, easy out. If for some reason it starts to taper off, it's an easy out. And if it's less than a year and a day, yeah, you will pay short-term capital gains taxes, but better to pay a higher tax than lose it all too, right? So that's my advice for a short-term, relatively safe, low barrier to entry type of investment that can produce an extremely high return in 1 year. I'd like to hear your thoughts on it. Please like, share, subscribe. Keep the questions coming, and I'll see you next Tuesday.